Imagine a coin crushed 80% from November's euphoria, now dangling over a $53 million liquidation cliff, while its network quietly onboards the top 100 UK equities, streams Circle's IPO price in real time, and dominates Sui's DeFi stack. Traders are rage shorting, analysts are throwing in the towel, yet the chart you're seeing hints at the cleanest double-bottom setup we've had all year, 5 clear profit targets stacked up like dominoes to $1.30. Today we'll unpack every data point, heat maps, TVL Oracle rankings, and fuse it with a 3-day wedge that's about to snap. Grab your notepad. By the end, you'll know whether Pyth is a falling knife or the year's most asymmetric long. Let's dive in. The heat map on screen is a murder mystery in Technicolor. Price has flushed straight into the lower boundary of a major liquidation cluster, 9 cents to 10 cents. There's still $53 million in open interest begging to be harvested below. That's why bears feel invincible. But here's the truth. When a cluster gets this fat, one sharp wick can clear shorts and flip sentiment in hours. My playbook: never knife catch inside the sludge, wait for a 5-minute close back above 11 cents. If that reclaim happens, shorts go from comfy to panicked, and the liquidity they just won becomes fuel for the first squeeze. Market analyst Hike called the June 17th daily close abysmal, and you can see why. Lower lows, no bid, textbook bear flag. But look closer at the micro price action inside those highlighted boxes. Each purge is followed by increasingly shallow bounces, classic compression. Compression leads to expansion, and expansion tends to move opposite the prevailing micro trend. Translation: the more dramatic the sell-off looks, the closer we get to a mean reversion snap that can rip faces off late bears. While traders meme about candles, builders are shipping. Pyth now secures half of Sui's entire TVL, $2 billion, and processes over 1 billion price updates. That matters because Oracle fees are paid in Pyth. Rising Sui volumes create real, non-speculative demand for the token. If you're new here, think of each price feed as a tiny toll booth. More traffic equals more tolls, and those tolls flow to staking providers. So, when someone says, "Price looks weak," remind them fundamentals are silently stuffing the treasury. June 18 unlocked London's top 100 equities on chain. No terminals, no paywalls. Rolls-Royce on Solana? That's sci-fi level, but it's live. Wall Street pays millions for millisecond feeds. Devs just got them for free. The addressable market just ballooned from crypto casinos to London's entire equities desk. Ignore the candle. Focus on the funnel. More price feeds mean broader data edge, which means deeper integration across protocols hunting TradFi liquidity. Circle listed, and within hours Pyth pushed their stock data to 100 blockchains, day one. Legacy providers make you wait quarters for a new ticker. Pyth did it before the opening bell cooled. Speed is a moat. The faster an Oracle ships, the easier it is for devs to build without switching costs. Pyth the token becomes the locked-in middleman, clipping fees every second. $82 billion monthly traded volume, $16 billion total value secured. Nearly 1 billion Pyth already staked. Those aren't vanity stats, they're cash flows and security guarantees. Volume drives revenue, total value secured drives institutional confidence, and staking siphons supply off exchanges. When you're eyeing the chart later, remember that every sideways week quietly removes circulating tokens while demand for data keeps climbing. Chainlink still rules, but Pyth has climbed to third place in total value secured, eclipsing Switchboard and Redstone with fewer chains, yet more depth per integration. We're still early in the Oracle consolidation trade. History says the top 3 capture 80% of the market once standards lock in. Pyth is already there, with the highest growth velocity in 2025. If you're hunting asymmetric bets, you don't chase the king. You buy the ruthless challenger before the crowd believes the upset. Here's where rubber meets road. The macro yellow downtrend from March to December 2024 has acted like a steel ceiling. Beneath it, price carved a descending wedge that broke north in April, tagged the 236 fib at 20 cents, and rolled over. Now we're in a smaller wedge starting May 10th, pressing into a potential double bottom at 9 cents. HARSI is hammering oversold, printing higher lows even as price makes lower lows. A bullish momentum divergence. VRVP shows a gap volume void up to 20 cents. Thin air slices both ways, but once price accepts above 13 cents, it usually teleports to the next shelf. My invalidation line is brutally simple. A weekly candle close below 8 cents, I'm out. Full stop. Survive that, and the TP ladder lights up. First take profit target at 27 cents at the 382 fib, and macro downtrend retest. TP2 38 cents, lining up with the 618 fib and last September breakout. TP3 56 cents, full Fibonacci reset. Also prior support turned resistance. TP4 84 cents, 1618 extension, and major all-time high resistance zone. TP5 $1.30, pure euphoria, 2618 extension. Exit liquidity for legends, risking 20% to potentially make over 500%. That's a magnific risk-reward ratio, better than most alt setups this cycle. But patience matters. Liquidity is a hydra. Slay one head and another appears. I'll ladder bids only after confirmation above 10 cents and ride a trailing stop through clusters. We've dissected the liquidity pits, mocked the doom candles, and spotlighted fundamentals stronger than most midcaps. Whether Pyth nukes to sub 8 cents or rockets to $1, the strategy remains. Respect invalidation, pyramid profits, and let data, not hopium, guide conviction. And speaking of leveling up the hands-on DeFi frameworks I rely on, staking ladders, yield farming loops, risk management for liquidity pools, are broken down step by step in my eBook DeFi Financial Freedom, the ultimate beginner's guide. It's just $5, cheaper than a single coffee, and it's already helped hundreds skip rookie mistakes while earning real yield on protocols like Aave, Uniswap, PancakeSwap, Velodrome, and Aerodrome. The link's pinned in the top comment. Grab it, master the cash flow side of crypto, and let those passive yields bankroll your next asymmetric bet. Punch the like button if you learned something, fire your thoughts in the comments, and subscribe with the bell so you don't miss our next deep dive, especially my follow-up on Pyth's Breakout in real time. End screen will queue up our previous Pyth videos so you can see how the story began. Until then, stay curious, stay solvent, and I'll see you tomorrow in the next one.